Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech. In this week's weekly roundup, I've got super interesting stories. The first one that really has gotten me quite interested and to some extent a little bit amused is JPMorgan's crypto pivot, and I mean serious crypto pivot. From Jamie Dimon's Bitcoin skepticism to stablecoin ambitions. I mean, from here to here in 1 second. I'll delve deep into that story shortly. My second story is on Access Bank's completion of its historic takeover of Standard Chartered Bank's 5 African markets. This comes with the close of the Gambia operations last week. We'll delve into that also in a bit. The third story I'm covering is African Fintech entering an M&A boom? Or let me rephrase this. Is financial services in Africa entering an M&A boom? My fifth story is on WhatsApp's very recent, just a couple of days announcement of WhatsApp advertising. Is this an evolution? Ads, subscriptions, and promoted channels. And we also look at this from a historical viewpoint. What happened to Yahoo Messenger? What happened to AIM by America Online? What happened to Skype and so on? My last story would be on Global Spotlight on Kenyan agritech and focus on Ketha, launched by a good friend of mine, Moniepoint. So let's dive into JPMorgan's crypto pivot. What has happened? Jamie Dimon has been known, he's on record of calling crypto fraud and all sorts of names. Now, with an announcement of a trademark for potentially what is going to be a stablecoin, codenamed or named JPMD, is there a hint that we are looking at a seismic change in how one of the largest and probably one of the most influential banking conglomerates this world has ever seen? What would that mean for the crypto ecosystem? So here is where a number of things are going to be very, very critical for us to look at. Number one, from fraud to frontline. Sorry, I couldn't avoid that. Jamie Dimon once called Bitcoin a fraud. Today, JP is giving clients access to it. Not just that, they are potentially launching their own stablecoin. What is the strategic intent here? This trademark will cover trading, payments, custody, tokenization. This is a very strong signal that JPMorgan is gearing up to play a major institutional role in blockchain-based finance. Then we have institutional credibility into crypto. So, guys, I think let's just say that until very recently, crypto was like a black box. Now we are seeing some of the major incumbent financial services players piling in. Now, with the entry of JPMorgan, I can only say this will 10x at the very minimum. So we need to be watching this space very, very carefully. I would not be surprised if Bitcoin prices have gone up. Actually, I haven't checked. I should have checked. Compliance as a serious competitive edge. Now, remember, guys, one of the things that I always say is, us guys in fintech, let's not forget the fin in fintech, right? And the fin, just in case you've forgotten, stands for financial. This issue of compliance, this issue that financial services is one of the most regulated industries in the world. That has not changed. That will not change. In fact, we are seeing more and more compliance requirements, more and more overview from financial services, policymakers, and regulators. With JPMorgan's entry as one of the largest, one of the most regulated banks in the world. I mean, JPMorgan is on record. The CEO is on record saying sometimes it's a pain, but they have to deal with this. This move should create some level of transparency, risk management, and regulatory trust into the crypto ecosystem. Remember that stablecoin is there mostly. A lot of times it's enabling the movement of crypto into fiat and vice versa. How is this going to affect the already established stablecoins? And I'm talking about USDT, USDC, and BUSD by Binance. How are they going to adopt? The stakes are real and they are global. With the US accelerated support for stablecoin, they've just approved a law to regulate stablecoins, so we are going to see some serious acceleration there. Blockchain pilots are going to proliferate across the US. JP Morgan's timing could not just be better. Yeah, the influence, the international regulatory frameworks that they straddle every day, the level of their compliance teams and risk management is unprecedented. Guys, my last point on this, I'm a Muslim, but I thought, let me quote the Bible on this one. The way of a fool is right in his own eyes, but whoever listens to counsel is wise. Proverbs 12:15. Let's move to the next story. Access Bank completes its historic takeover of Standard Chartered in the Gambia and for other African markets. Let me repeat what my son Hashim told me. He seems to have this knack for Niger English, or is it Pidgin English? Guys, forgive me for the massacring of the accent, but for me, what he told me, I asked him to tell me, what would you say? How would you say it in Pidgin English? Is the Nigerian financial services brands are really kicking it across Africa? And he just gave me one sentence. Let me repeat it. He says, Niger no the playo. We go rano. That's what, for me, sort of encompasses what Nigerian financial services players, from fintech to incumbent financial services, what they're doing across Africa. Now let's talk about Access Bank, one of the largest banks in Western Africa. They have done several acquisitions in the African continent. In Kenya, they acquired one small bank. I forget the name of that bank, Transnational Bank, a few years ago. Recently, hardly a month ago, they have consummated the acquisition of National Bank in Kenya. Now they have closed the acquisition of Standard Chartered bank operations in 5 African countries. What are the key takeaways here? Nigeria is leading in the continent in M&A activity in this space with $4 billion in West African deals. Africa's M&A market has surged 36% in 2024 compared to 10% globally. So we can start seeing super interesting activity across the African continent. Digital transformation is remaining a top priority for most of these banks, with 76% of African banks. Fintech M&As are skyrocketing. Interesting space, guys. Very, very interesting and vibrant. This is very crucial because traditional banks are consolidating to stay competitive against fintech disruptors. In some cases, they're acquiring them, like KCB acquired Riverbank Technologies a few months ago. This could also mean better efficiencies, stronger regional capital bases, faster digital innovation, but also raises questions about potential disintermediation in the ecosystem. So, as we are gearing up for $1 trillion in GDP across Africa, these consolidations are going to come in more and more focus. My last comment on this is, can big banks innovate fast enough to keep up with fintech, or is disruption inevitable? Interesting times, very interesting times. My next story is on African fintech entering an M&A boom. Nigeria's digital lending pioneer, Migo, has been quietly acquired by one of its earlier investors, First Ali Capital, which has taken a 60% stake in its Nigerian operations. Migo really is a platform for lending. It has created a lending platform where different players can come in and offer loans to customers. This consolidation trend, as I'm watching, is becoming quite interesting for me. So let me give you a quick rundown of what has been happening in the last couple of months and years. Let's look at the telco ecosystem first. Telco fintech convergence. You've got M-Pesa Africa as a joint venture between Safaricom in Kenya and Vodacom in South Africa. You have MTN Momo becoming sort of being moved out of the MTN mothership. And the latest one was in Uganda, where they announced MTN Momo Uganda. We have Airtel Money, the same. It's a separate entity now. But more interestingly is that we are seeing the big payment and card companies, Visa and MasterCard, sort of playing the big game in this space. MasterCard taking a very strong position with investments into MTN Momo and Airtel. Then we're looking at Pan-African expansion of Moniepoint Group, the acquisition of Kopo a couple of years ago, and just the recent acquisition of a microfinance bank in Kenya. So back to Nigeria, this Migo deal could reflect some renewed confidence in the ecosystem, in digital credit models, in fintech in general. Here are my quick questions, which are 3. Is investor appetite for scalable African fintech solutions rising again? Number 2, are telcos, fintechs, and payment giants on a collision course or a path to collaboration? Number 3, are we witnessing the normalization of exits and M&A as fintechs push for sustainability? I leave you with those questions as the consolidation and M&A game continues to hot up across Africa. Now we come to WhatsApp's biggest evolution yet: ads, subscriptions, and promoted channels. Very interesting times, guys. So first, let me just say this. Who pays the piper calls the tune. For too long, in fact, we have been used to free WhatsApp, free BBM, that's BlackBerry, free Yahoo Messenger, free AIM Messenger, that's from AOL or America Online. So, bit of history. When I was working at 3 Mice Interactive Media, one of the leading digital agencies in the mid to late 90s, our core platform for conversations was AOL, or AIM as we called it. We could collaborate across our African markets when we were acquired by Africa Online. Today, this has been democratized by Skype, by now WhatsApp. For too long, WhatsApp has been free. Until very recently, then they launched WhatsApp for business. I've seen, like, my friends at GoBeba, they've launched a fantastic WhatsApp platform fulfillment. I can order water, gas on their WhatsApp platform. I can pay. They pull out my my address. I don't need to speak to anybody. It is a fantastic user experience. I don't even go to the website anymore. So that use case for WhatsApp is coming into focus now, for businesses at least. The question now is for B2C. You guys who are used to free Mushenez on WhatsApp, you're going to start paying for it through advertising. So, what is this announcement? Number one, ads in updated tabs. Businesses can now promote directly within the status feed without disrupting private conversations. Come on, guys. You're going to be disrupted. You are conversing and you are seeing ad on top there. Yeah, so just prepare yourself for it. Paid channel subscriptions. Channel owners can offer exclusive content for a monthly fee. I love that. In fact, that is something that I will be keen to even explore myself as a media company, as Ali Talks Tech. Creating new income streams for creators and brands. Promoted channels. Channels can now pay for visibility. Oh my God. We are getting into the World Wide Web within WhatsApp, making it easier for users to discover new content and services. This is very, very important and crucial. So, while the all platforms that I mentioned, AIM, BBM, Yahoo Messenger, Skype, MSN, faded into tech history due to stagnation, poor mobile strategy, monetization misfires, is WhatsApp evolving in ways that will sustain itself? Let me give you some numbers. Do you know what it costs? I know Meta doesn't break it down, but I did some quick numbers yesterday to look at how much it costs to keep WhatsApp up and running for you guys to continue with your Mushanese. Anywhere between $2 billion to $3 billion a year. That's what it's costing Meta, the parent of WhatsApp, $2 to $3 billion to keep WhatsApp lights on 24/7. So the evolution is clear, guys. They do not want to go the way of the predecessor. So they are starting to blend and they are starting to experiment with monetization while trying to, as much as possible, not to disrupt our user experience. But most critically, will they be able to keep privacy intact with end-to-end encryption? There are too many stories that we hear about that. I don't want to dwell into that. That's not the story for today. So this shift is going to be quite interesting. These private chats are becoming very, very crucial for WhatsApp. A couple of things that we're going to see. Number one, new tools for businesses to reach and engage global audiences. Remember, WhatsApp it has 60 language options across the world. Monetization paths for creators, very crucial, through subscription content. A potential blueprint for how messaging apps can balance revenue, reach, and respect for privacy. Here's a big question. Will Meta's bold WhatsApp play redefine messaging at scale or repeat the mistakes of the fallen giants? Looking forward to how this is going to evolve. My last story today is a global spotlight on Kenyan agritech innovation. Huge kudos to Munyendiga, my friend, and one of the co-founders at Kitha, for showcasing Kenya's rising agri-tech potential to the world. A couple of days ago, they hosted a powerhouse delegation of professors from Oxford, Harvard, Cornell, Lagos Business School, Makerere, and more, all eager to understand the bold vision behind Kita. Munye, I hope I'm pronouncing that name properly. What stood out for me in their journey is a couple of things. Digitizing the agriculture value chain. What does this mean? I think I'm going to have to bring in Munye again to discuss this. Already live in 4 chains and four value chains across the agri sector in Kenya and expanding to 14 this year. 2, build around the smallholder farmer. Its solutions are directly addressing everyday issues challenging the smallholder farmer in Kenya. Hopefully, we will be able to scale this across the continent. 3, sustainable collateralized agri-financing, tailored to each actor in the ecosystem using data-led decisioning. 4, quality and traceability. This is very key to unlocking export markets and value chain integrity. 5, agri-SMEs as engines of value, giving them tools, visibility, and access to working capital from financial institutions. And last but not least, a bold vision to democratize financing for African farmers. So, looking at what Munye and team is building, it's clear to me that Kita isn't just building tech. They're solving real problems, creating efficiencies, and helping banks imagine how they finance agriculture. And the fact of the matter is that global academic institutions are starting to pay attention, and we're hoping this will expand beyond academia. This is the kind of African-led innovation that excites me. It's smart, it's scalable, and it's rooted in impact. And with that, ladies and gentlemen, I will close this week's weekly roundup and looking forward to next week. Asanteni sana.